Okay, I'm looking at a chart of MasterCard MA, and it's now later in the week, but I'm looking back here at the 18th because I just posted a video showing on that day I did take a trade, and I want to show you how I managed the risk on that trade. And then I can look at a couple of other days and kind of give you examples again, how where kind of my stop losses are, but more importantly, how I manage risk very tightly with these trades and what a good trade looks like and what a bad trade looks like. So if you on that first video I posted on MasterCard, I was actually buying it up here at the at the moment this was turning into a green shooter bar, this 15-minute first bar on the 18th. And you could see here it actually closed red and then started lower, and I remember this trade. I immediately got out, and I want to show you, if I go here, this is the 5-minute chart of that opening. And I was actually buying it kind of near the very end of that 15-minute bar where it looked like it was going to turn green and be a shooter bar and head higher. And what happened was, and that's up here around, I think it was 341.50-ish or something like that. Yeah, I believe it was that. I'm sorry, 371.50 is where I kind of got in. So let's call it kind of this blue line. It was kind of right up here. It might have even been up here, something like that. So what happened was, as soon as I entered the trade, and it was a little early because normally you want to see the 15-minute bar form, then buy the breakout, but I anticipated that. But as soon as I saw that 5-minute bar close red and then make a new low, I immediately got out. So, and that's about 370-ish or so. So it was like a 1.5 loss. And then, as it turns out, we started red here, nothing happened, and I didn't consider the stock for the rest of the day. So it was actually a very aggressive trade early. And once I saw this bar close like red like this, I mean, normally I'm trying to buy just a strong green bar to begin with. Why I was buying this shoe, I guess I was anticipating a 50% rule kind of thing where we opened up lower, we we were coming all the way up, we were going to close green, and I figured we'd follow through at least to those highs. But, normally you'd wait for the breakout of that bar. So I was being aggressive, but, with a couple of minutes to go in the bar. Anyway, just showing you using the 5-minute chart how tight I actually managed it, because I said, oh, I'm wrong. So now I can get out here. And then if it does break above that buy, I can buy again. I just kind of wanted to point that out. So that's like a real life example where, in this case, just got in too early and I'm ready to get right out because I can see that, it's not the type of bar I really want to enter to begin with. Now, if I would have bought this day, here's just an example. First of all, it's below the midpoint of the prior day, so I probably wasn't looking to buy anyway. But just looking at the opening green bar and then the corresponding 5-minute chart, let me get to that here as I wait. Yeah, with a trade like this, let's assume it was a good green 15-minute bar above the midpoint of the prior day, and I was getting in right near the high of that bar. And then it followed through nicely on the second bar. So at least I got the follow through I wanted to. I posted a video early in this series showing if I just fail to, get a move above that first bar, I'm almost immediately getting ready to get out. But in this case, it followed through nicely. So you think you have a nice trade going. But obviously, you could see it came all the way back down. Now, the question is, would I have scaled out on this first move and cut my risk to break even? It probably didn't, in this case, move enough. It was probably close, but let's say I didn't get it. So now I'm in my full position. What I definitely would have done, and this I see this all the time. Normally, I have my stop at the midway point of that first bar, but when I see this second bar, after I get a nice start to the trade, and then I see that second bar forming a red bar, above the high and closing all the way red, then I'm going to get out below this bar here, and it's almost a break-even trade because I just, I had enough gain. I mean, I'm getting ready in my mind to be break-even anyway, even though it didn't quite give me enough room to set that break-even stop. But when I see the big red bar, in that case, I know if this would have been just a little small pause red bar, and then we came down again slowly. At that point, I'd probably give it to the midway point of that first bar and just see if we're getting one little pullback and then a start up again. But this is a big red bar right after, immediately failing that first bar high. I can tell you I would have, broken even just about. And then I would have maybe, if I still was interested in the stock, if it would have given me another 2 down, 2 up kind of thing, as long as it held the midpoint of that bar, I might have re-entered. So that's that. And then finally, if I go the next day, which is a good example of how I would, hold on to a trade. So here's the 15-minute bar heading up. This one is above the midpoint of the prior day. So I would have been buying this at the end. Now you get that nice set follow through here, kind of like you had yesterday. But in this case, you could see we just paused for a couple of bars. So I feel very comfortable with that. Again, my stop's kind of here initially. We're not getting any big red rejection kind of thing looking. So I hold on. Then as we start pushing up here, I'm definitely scaling out, and I can see these bars are not, they're getting weaker and weaker on the way up. So I'm probably taking gains because, again, I'm always taking gains early in the morning, first directional move, however they form. And even if it goes a little higher, generally, like I said, I have targets. I kind of know where it's heading. And as it's heading there, and as I see, the way that these 15-minute bars are forming, I'm just exiting before the turn usually. And if I did hold on and I kept holding, I would definitely exit on this 2 up, 2 down little, bar here. So it would have been a nice trade from here to here. But the main thing is I just want to show you again how I try to control risk. I look at the 5-minute charts at times. I'm looking at the 15-minute bars. I want things to immediately go my way. I'm looking to break even if at all feasible. And MA was a good example though of all, these 3 days were good examples of these different types of trades that the way they can form. But this one, the one I actually took, was actually a mistake in a sense, because I knew I was getting in early, but it just really had a good shooter potential at the time I was exiting, entering with like a minute or two to go. But as soon as I saw this thing closing red, I knew I can get right out. And then, at that point, my real buy was above the high of that bar. So, that's kind of what I do a lot. So anyway, just wanted to show a little bit of a realistic, way to manage these trades, and how I, look at that first 15-minute bar as the key reference point.